When the price of a token increases, does it affect the original value of the asset?
Tokenomics increases the velocity, but doesn't change the economic principles, which is demand and supply and demand-supply driven price movement. And I always have said this both in my investment career as well as working with large financial powerhouses, this price is what you pay, value is what you get. So essentially, price of the underlying asset is driven by the demand and supply of the underlying asset. And of course, I think Mike alluded to this, that when you're getting into secondary markets, which is what token facilitate, then you have a little bit more of speculative charge to the valuation of underlying asset, which means suddenly now that you have velocity, and this is what every exchange does as you are building a dematerialized asset, which is what stocks and securities are. So to me, I don't think you can displace the underlying economic principles of demand and supply, but I do think that there's a little bit of frenzy around token, which again is a speculative charge, does not reflect the underlying value, but it does reflect the market movement and market volatility.